Hello, dear admission officers. This is Xinong, a senior student studying finance at Wuhan University. The title of my presentation is Luckin Coffee, IPO, and its financial scandals, and I will break down the whole story in the following perspective: the logic and market circumstance behind Luckin Coffee's rapid expansion, the difference of listing system between China and the United States, Luckin Coffee's financial scandals and its delisting, and my conclusion, urging caution regarding investments in growth companies. Let's talk about Luckin Coffee itself first. Established in 2017, the company rapidly transformed itself into China's largest coffee chain. The staggering speed of expansion impressed investors from China, United States, and all over the world. Chinese coffee market's huge potential contributed to its rapid growth. With over 1.3 billion people and relatively low per capita coffee consumption compared to similar economies like Brazil and Vietnam, Luckin saw an opportunity. They strategically priced their coffee lower than luxury brands like Starbucks, using coupons and extensive marketing to encourage coffee consumption. This approach, backed by multiple rounds of financing from investors that secure capital, proved very effective. By the end of 2019, Luckin expanded to 4,910 stores and generated $434.5 million in revenue. The need for capital brought about by rapid expansion and the desire to gain higher visibility contributed to the IPO of Luckin Coffee. However, despite the early triumph of the company, Luckin Coffee still hasn't ended its losses and achieved profitability. The solid listing standards of China's A-share require the company's profitability. Luckin Coffee can only seek to be listed in the United States. Among the four listing standards for Nasdaq, Standard 3 and Standard 4 does not require the company to be profitable before IPO, which is a great opportunity for Luckin Coffee. On May 17, 2019, the company was officially listed on Nasdaq in the United States. The Nasdaq listing imposes requirements on the company's market value. Among several valuation methods, the DCF model is not suitable for Luckin Coffee because as a growing company, Luckin Coffee has greater uncertainty in its future revenues, and Luckin's total sales are growing rapidly and its net profit will continue to be invested on new expansions. The price-to-earning ratio cannot be used as a valuation reference since it does not generate any earning. Choosing the price-to-sales ratio is suitable for companies like Luckin Coffee, whose sales are growing rapidly and does not generate profit. Except for the impact of the listing in 2021 and the early days of entrepreneurship, Luckin's price-to-sales ratio is roughly the same as Starbucks. Therefore, we estimate based on the price-to-sales ratio of 3.5, Luckin Coffee's forecasted market value in 2024 is $12.25 billion. Many people have believed that Luckin Coffee's expansion was sustainable and ultimately profitable. However, Muddy Water Research thwarted Luckin Coffee in 2020 by revealing that operation and financial data of the company is fraudulent, resulting in the delisting of Luckin Coffee in the same year. After analyzing the data collected for staking out at Luckin Coffee stores, Muddy Water found that Luckin has exaggerated the non-daily number of products per store by at least 69 and 88% in the third and fourth quarter of 2019, and among them, the daily sales volume of monitor stores in the fourth quarter was only 263 items, contrary to Luckin Coffee's own estimation of nearly 500 items. And on April 2, 2020, Luckin Coffee issued an announcement admitting to 2.2 billion RMB in fake transactions. The stock price then plummeted for 80% and trading was suspended several times during the session. Luckin Coffee closed down 75.57% to $6.4 with $4.95 billion in market value evaporated. This event reminds us that companies must comply with financial rules and ethical standards to maintain fairness and transparency. In addition, the delisting of Luckin Coffee also indicates that company must have a sustainable business model rather than relying on subsidies and low-price sales to attract customers. Finally, the delisting of Luckin Coffee also reminds us that investors must invest cautiously and carefully research their investment portfolios to ensure that their investments are sustainable and ethical. Thank you.